On the call this morning, overseas markets are lower on Greek debt issues as turmoil erupts among top EU officials over finding a solution to Greece's fiscal crisis, potentially delaying the next portion of its bailout. The U.S. dollar is rallying on the news, forcing silver and crude lower in early trading. And U.S. futures are also down nearly 0.5%. 10 today's U.S. economic figures on inflation stabilize the market. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, happy Wednesday, happy hump day. Let's get to these markets. So Tuesday saw a nice rally, but now futures are pointing to a lower open. Can we assume that Tuesday's bounce was an oversold rally here?
We can't assume that yet. What we have to do is we have to measure that bounce as we move forward. Now, I told you yesterday traders are going to be coming in frustrated that we're up 10, 12 handles. They would have rather have seen a different setup. You know why? Because we put our high in the day in at 3 o'clock and we closed off those highs. That means anything you accumulated during the course of the day, you wound up probably net down on a day that was supposed to be such a big day in the market.
Right.
So it was an update for the market, but a horrible setup for traders yesterday.
So is this setup today where we see futures down actually better? Are you more excited today going into the markets?
I came in today and I saw the futures down 7 handles and I said, okay, this is a better setup. If yesterday's move has any validity, we should hold at least half of it. We should see some commitment to the move. So what I want to show you in the spiders is where the gap started from yesterday and how I think you could play a negative to positive move in the futures and then later in some of the strong stocks from yesterday. So if you take a quick look here, I'm going to do it with the spiders just to always give you, a quick reflection. This is when we killed Osama bin Laden, the top of the market, that breakout failure, and then the move lower. So now we held important support and we had a nice gap up into this small resistance. So on the spiders right now, I want you to write down 128.82. This is the gap from yesterday. If we fill a little portion of it today, I still think it's okay. But in order for this rally to be any good, we really have to stay above 128.20, 128.50 to show some type of power by the bulls. If we give back that entire gap, and today we just closed really red, people are going to say that was an oversold bounce, and then that 1250, 1255 area could come into play. So we have to watch the action the next few days.
So if we do hold above that critical level, do you want to start adding to the longs, and otherwise then do you want to be shorting?
Well, if we hold today or yesterday's gap and we go positive today, I think we could get a little bit more of a bounce short term. So if we go back to the charts, if we hold this area, the next area you could buy through is if we start trading through about, 129.77, 130, and that could give us a bigger bounce to the 131 area, which was the breakdown of this last descending channel. So what you want to do right now is you want to have the easy bounce was yesterday. Then you want to have in place an area of higher resistance that we could continue to trade to, and then the line in the sand where bears are going to try and re-short in order to position themselves for what could be a bigger down move later this year.
All right, that's a good trading strategy, guys. We're going to be right back after this with options expert trader here, Skip Rushke.